Welcome to Real Estate Radio Live, an informative and engaging hour discussing everything you need to know about the world of real estate. Your host, Joe Cucchiara, provides you with insight and guidance on how to buy, sell, finance, and invest in real estate. He also offers real estate tax management.
Live today from the Verge Restaurant and Lounge here at the Toll House Hotel in Los Gatos, as we do usually every first Tuesday of the month. And I will invite my guest in just a couple of minutes. Just a reminder, we're with you 5 days a week, Monday through Friday. You could tune in and listen to us 3 to 4. Some bonus time for you on Wednesdays and Fridays. We're with you from 2 to 4. And a couple different ways you can listen to us. One is on your radio at KDOW 1220 AM. You could also listen to us live online if you go to KDOW.biz. And we're excited now to have our podcasts available, so you could download those and take those anywhere. More information on the podcasts, go to RERadioLive.com. Most of you know they've been following the show for 4 years now. The focus is education information, so we work really hard with the team here at Real Estate Radio Live to bring great guests like we have today, our partnerships, content information to help you, the consumer, make wise financial decisions in your real estate, and that's what we're focused on doing. With that, I'm going to invite in my guest and co-host, Mr. Tom Wilson. Tom, good to have you here today.
Thank you, Joe. Always good to be with you.
Especially in an event like this.
Yeah, indeed.
It's good. Good to be with you.
Fun being live.
For those that may not recognize Tom, you should. He is a co-host on Real Estate Radio Live as well, and he is the CEO and founder of Wilson Investment Properties. Today our topic is going to be on investment insights, choosing the best structure of investments. And Tom is an expert for sure, so if you're in the audience here or if you have any questions, we're going to delve into this and get pretty detailed. Thomas has a vast experience over the last several decades, executed over $120 million, 2,500 units, mostly in and out of Texas, but a lot here in the Bay Area and all over the place. So we're going to get into some good details about should we invest here, should we invest elsewhere, and many, many other things. And Tom, let's get started for those that don't have the benefit of knowing your background. If you could tell us a little bit about your background and then how you landed in this investment business.
Thank you, Joe. Yeah. Well, hopefully after being that busy, I've learned a couple things, at least what not to do. So I try to share what I've learned with others so they can have a quicker path to success. I guess my first aha moment in real estate was when I came out as a young engineer from the East Coast to work for Fairchild in what was to become Silicon Valley. And I rented my first house and found out the landlord lived next door and he owned half the street. I thought, that's pretty interesting. That's a new paradigm. Never heard of that before, but I didn't forget it. Got some encouragement along the way, and I accumulated a number of properties in the 70s. Confused investing with landlording. Didn't like landlording, so I stopped buying. So, but after about 30 years in high tech and a couple of startup companies, I one day woke up and figured out I'd made more money while I was sleeping than I had working, and I decided it was time to change careers, switched over to real estate, talked to everybody I could find who was successful and experienced in real estate at that time, and to my surprise, most were investing out of state. So I studied the country, lots of metros, selected Dallas-Fort Worth, started selling properties in California, exchanging down there. And then after a few years, I had a lot of folks that said, well, Tom, you've got a lot of experience and knowledge and a team there in DFW. Can I just buy from you? Mm-hmm. So we established Wilson Investment Properties back in 06, and we've provided about 500 homes to investors and a number of commercial and multifam syndications. So here we are many years later of all that investing, and my gosh, it's still out of all the things I've invested in, real estate's been my best get-rich-slow scheme I can find.
Well, that leads me to the next question, because most people want to know the diversification question always comes up, and why not the stock market and why not investment? What's in real estate versus securities? Maybe you could talk a little bit about your thoughts and your philosophy, if you will, on that in terms of investing in the stock market. There's historical data that you could probably share too. Is it a diversification play in your opinion, or is it real estate only? Tell me a little bit about what you think about that, especially with the success that you've had.
Well, certainly as time has gone on, I've had more and more success in real estate and less in other things. So I probably most financial advisors would probably tell someone that I have too much in real estate. But that's what's been most successful for me. And as long as you diversify in different products and different sizes and so forth, I think that helps reduce your risk. Been in securities and retail franchise and oil and gas and dairy and options and commodity market and all kinds of investments. And consistently, if you look at certainly paper investments versus different kinds of real estate over the last 50 years, real estate over the long haul has always prevailed by a significant amount. And you have to wonder in a time like this where we have significant run-up in prices and the stock market, which is probably fueled largely by people looking for higher yields since the Feds have kept the rates down, if it isn't overheated. So I'm certainly nervous about it, and the people that I've follow most closely are nervous about that. But I think if you pick the right metro and the right real estate, you're especially if it cash flows now, which I always advise people to do, you've got a pretty good return risk ratio.
Right. If you're just tuning in, this is Joe Cucchiara again with Real Estate Radio Live. We're with you 5 days a week. Today we are live from the Verge Restaurant and Lounge here at the Toll House Hotel in Los Gatos. The show goes from 3 to 4. We'd love to have you come down and join us from 4 to 6. We do have a mixer. Come on down. Still plenty of time to not only listen to Tom, the expert on investing in real estate, but to have a little fun afterwards from 4 to 6. Tom, the other question, we'll get into more detail a little bit later, but as you're talking about investing in real estate, we have to be, or you should be clear, we all should be, in terms of there is the long-term hold. Some people do both. Some people buy real estate and hold it long-term and cash flow. Others will buy real estate and flip it. So two entirely different things, right? Maybe if you could speak to a little bit about your experience, because you've done both, very successful, and maybe how, how different they are, both of those strategies, and how you might want to be careful in both of them as well.
Indeed, one is an active business and one's a relatively passive business.
Okay.
So flipping, if you have no money and you want to get started and you get a partner or someone with experience in either of those routes, but especially flipping properties, who's maybe provides the money and you provide the sweat equity and the work. Flipping, it can be a way to accumulate some money. The problem, especially now, is that there's so many markets that are overheated that it's very, very, and so many people chasing after what on the surface from TV shows looks like an easy business. It's very, very difficult to find enough margins to make flipping a house work. Most people also underestimate all of the expenses that go in to flipping a house, the surprises. I've flipped hundreds of houses, and almost all of those are successful because I've established a formula and a pattern and repeated the same thing over and over again. But if you go, say, in a high-end area like San Francisco Bay Area, and you try to find a property, and nowadays what's happening is people are assuming in order to make it work that they're going to be able to sell it for more than what the market is now. Right. Now you're getting to real dangerous speculative things, even without surprises.
Right.
So I would say certainly flipping is viable. But if you do it, make sure you get a partner who's got experience and ride on their coattails if you're willing to put in the sweat equity. Yeah. Passive, on the other hand, is an approach to acquire assets that produce cash flow and can contribute toward your retirement. And in that case, you can do it yourself, but I'm one who learned early in my career in high tech the power of delegating and surrounding yourself and utilizing people that have a lot more experience than you do. And I think that's no different. In the old days, it wasn't much difference from one metro to another, and the old adage was only buy something that you can drive to. But nowadays, just like you'd pick, if you're going to buy a stock, you'd buy the one with the best return, not the one that has a corporate headquarters down the street. Same thing with real estate, but you just like a company you invest in stock-wise, you got to have good management and ride on the coattails of somebody who's an expert in that area and who has the buying power and has the resources to find the best product. So I think for long-term retirement and independent financial income and wealth, buying long-term holds is the way to go. The flipping houses is just an interim active way to make some money.
Very good. What about the single-family residence versus the multi-unit? Can you talk a little bit about the difference? The obvious difference is the single-family versus, but maybe in your experience, what you like to buy, what you like to invest in, or is it purely when you look at a property, and it's best on radio and actually explaining just common sense as we can. When you look at a property, do you automatically always seek out a multi-level, or I should say a multi-unit property, or is it single-family, or does it really depend on the market, the investment? Talk a little bit about the difference in those two products.
Well, when someone's starting, it's risky to put too many eggs in one address. So a multifam property, I've owned 7 of them, and I believe that if you're going to have a multifam property, you want to have one that's large enough to be able to afford a full-time on-site manager and maintenance person for economy of scale and control. So these smaller ones are very, very difficult to manage, so you're putting a lot of money into one address. And although what appears to be just a bunch of houses put together in one address, an apartment complex has a lot more complexities to it than people realize. It's you've got subcontractors, you've got a lot of tenants next to one another that need to be managed, you've got inspectors, lots of things. So for starting off, I think for most people, houses are a better approach because they tend to appreciate more because they're driven by the owner-occupant market. They're more liquid. You can distribute your risk among a number of different addresses. So I think between those two, that's better. The problem right now in either of those is that you've got so many people chasing so few deals, it's hard to find good ones. But it still tends to be better than alternatives such which tend to be very low yields right now in the paper arena. All
right, we're going to have to take our first quick break. When we come back, much more with Tom Wilson, the CEO and founder of Wilson Investment Properties. Come on down and join us. The show is from 3 to 4. We're at the Verge Restaurant and Lounge. This is Joe Cucchiara with...
Welcome back to Real Estate Radio Live, streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, just visit RERadiolive.com. That's RERadiolive.com. Again, your host for Real Estate Radio Live, Joe Cucchiara.
Welcome back in. Thank you for joining us this afternoon. Joe Cucchiara with Real Estate Radio Live. We're broadcasting live from the Verge Restaurant and Lounge here at the Toll House Hotel in Los Gatos, as we do usually the first Tuesday of each month, and inviting everyone in the industry, communities, the consumers to come on in and listen to the great guests and experts like we have today, Mr. Tom Wilson, who's the CEO and founder of Wilson Investment Properties. Tom has, over the last several decades, executed over $120 million, 2,500 units of real estate, apartment buildings, commercial, on and on and on. You got quite the resume, Mr. Wilson. You've done well.
Whew, makes me tired just hearing about it.
Although it makes you tired, but as you think back, the move that you made out of high tech, you never go back, right? I mean, you're happier than ever in that.
I sure wasn't. And even though I'm kind of on or off, I either still work like the Silicon Valley work ethic, or when I play, I really play. Right. So I take off about 10, 12 weeks a year and get refueled, and then when I come back, I keep her going. It's wonderful, isn't it, in this day and age? You can take your laptop with you anywhere in the world and keep a business going as long as you've got a good staff taking care of things.
It's very true. We're going to get in a little bit of that work-life balance in a couple of minutes, but first I want to finish up a little bit. Let's talk about commercial. We talked about investing in general, the real estate, the philosophy. We did the single-family versus the multi-unit. Talk a little bit about commercial. There's people that are interested in investing in commercial as well. I know, again, here you have the expertise. You've been in this. You have investors. You're doing a lot of different things. Maybe give the listeners a little flavor of what you're doing with commercial. And then what is commercial like to invest in versus residential? And, again, I'm guessing you're going to tell people, make sure you align yourself or partner with someone who knows what they're doing, right?
Indeed, always, no matter what you're doing in life,
right.
I think. But I think commercial, the word is scary to a lot of people because they're not as familiar with it.
Mm-hmm.
And anything we aren't familiar with feels more concerning or more risky. What's happening right now is we've got a lot of new investors in real estate, and the natural progression once they go from houses or 1 to 4s is to think, well, let's just go to more of them in one building, and that's a multifam. So what's going on right now in most of the hot cities in the country, the good economic cities, is that we've got too many people chasing too few deals. So the yields on multifam now, although I think better than a lot of other assets that one might invest in, are not as good as they were and not as good as commercial. So, multifam's been very popular for one to invest in for myself and my partner, Steve Fithian in Dallas, who's a 30-year broker down there. And so right now, in the past year or so, we're finding better yields with commercial. Now, it's not under the radar. It's still got a lot of people chasing it, but not as bad as multifam. What I like about commercial is that you've got higher quality tenants, often national tenants, long-term leases, usually built-in bumps. It's easier to manage. So some of those advantages, along with the higher yields, are why we like that. Now you have to be careful and pick the right ones, but we like industrial, we like office, we like retail. Those are the ones that we're doing, and the ones that we're investing in now. So those are some of the advantages of commercial over multifam right now. The problem again is that you're usually talking about a lot of dollars unless you're syndicating, and that's we'll talk about that later. So.
Yeah, and we'll also give your information out a couple of different times because I know that you do seminars, you do workshops, you get involved not only around the Bay Area but in other locations as well. You do tours. Talk a little bit about. I'm guessing more information they could find at your website, but a little bit about how important education is to you and some of the events that you put on during the course of the year.
Well, indeed, I think you don't want so much education that you become just a long-time student and never take action. But education is important, and you couple that with teaming yourself with someone you have confidence in, someone that has a lot of experience, and they can help take you to higher levels pretty quickly. So I think those are very important things to do, is to find others who are more experienced and smarter than you are and ride on their coattails. So I do that. I tell people, even with all these experiences that I have, if I start investing in a different product, or especially in a different city, I think I've learned a lot to ask some good questions, but I'd never consider doing that without also bringing on my team somebody who's an expert about that particular area or that particular product.
Yeah, no, I would agree. So the education that you have attained over the last several years and the success that you've had, when we come back, we're going to take a break here in a minute or so, but I want to talk about a little more about that and how it's really developed you as an investor. And then I want to talk about life and work balance. One of the reasons you switched and did this is, you were more entrepreneurial, I know, and you love the idea of investing, but it also affords you some opportunities to do some things that maybe you wouldn't if you were in a traditional business. So I want to chat about that when we come back, too. All right, we're going to take a quick break. When we come back, also during the break, if anyone in the audience would like to come up and ask Tom questions, just Tom, because he's the expert, not me. Tom Wilson is here, and he'd be happy to answer any questions during the break. Come on up and join us. Otherwise, we're going to take a quick break. This is Joe Cucchiara with Real Estate Radio Live. We are broadcasting live from the Verge Restaurant here at the Toll House Hotel. Come on down and join us from 4 to 6. I'll be back with you to continue. And we're broadcasting live from the Verge Restaurant and Lounge here at the Toll House Hotel in Los Gatos. Come on down and join us. After the show, we will have a mixer from 4 to 6. I'm joined for the entire hour with my co-host here, Mr. Tom Wilson, is the CEO and founder of Wilson Investment and Properties. We're talking about investment insights, choosing the best structure and strategy for you. There's a lot to investing. You hear it a lot. You hear a lot of hype. You see a lot of stuff on TV. You see quick, getting rich quick. You see programs, seminars. you get hit all over the place, don't you, Tom? And so talk a little bit about, we finished up, I don't want to spend a lot of time, but how important it is to, when you're getting barraged by this stuff, how do you determine as an investor, if I'm sitting in the audience today or listening, I'm excited about investing, I want to invest, and we'll talk about the difference between the Bay Area and outside and those things in a minute, but how do you know the first step to take? In other words, how do you know who to trust? How do you go about that process? Because there's a lot of people that get fooled. There's a lot of people that go to a seminar, and for $1,250 you could buy the dream, and you could just step out of the location and make millions. But so what would you suggest to the person to be sure that they're aligning themselves with maybe the right people like yourself, or their due diligence they should do?
Well, you got to get enough education in order to be able to ask the right questions. But then, there's action speaks louder than words, and so I like to find people who've done what I want to do and utilize their expertise. So in the world of rental properties, find a turnkey operator, turnkey provider that's been around for a long time who has the expertise to manage and find the best properties and rehab them and so forth. In the multifamily commercial world, Wilson Investment Properties is doing syndications now because that enables people who normally couldn't afford or don't want to put that many eggs in one basket into a quality commercial, retail, or industrial or office center. They allows them for $50,000 a share to participate in things that normally only a larger investor can afford to be in.
Maybe explain the syndication a little bit as so people understand. Is that a little bit like crowdfunding, or I know people refer to the investment trust. Maybe talk a little bit about how those syndications work and how people could participate.
Yeah, it's to those that haven't participated, it sounds maybe concerning or scary, but syndication is really just the pooling of money to buy an asset. So what happens is someone like Wilson Investment Properties will find a product, go get it under contract, develop a private placement memorandum by their attorney, form an LLC that owns it, and a management firm that will manage it, and then people can buy shares in that. And as long as you follow the right instructions and file it with the SEC, as we do, then you're allowed to do that without going through a full initial public offering like you do with a new stock company. So we have right now a $10 million office building that we've just secured, and we're raising the funds for that, and at 50,000 shares. So someone can participate in that. This happens to be a building that's in the center of the telecom corridor of Dallas-Fort Worth, the highest employment growth metro in the United States. We're very excited about that. We've done retail centers and others. So anyway, it enables someone to participate at a fairly small amount of money into something that normally only the big investors can do, as long as you find a syndicator who has experience doing it and knows how to choose it. My partner has been in the business long enough and established relationships such that he gets 300 deals across his desk a day. A day.
Busy guy.
So unless you have someone like that, there's no way you're going to find the best deal.
All right, we're going to take another quick break. When we come back, we're going to continue. We're going to come back and talk a little bit about trust deeds, and also, do you invest in California or other states? That's the big question I'm going to ask Mr. Wilson. Joe Cucchiara, good afternoon. Thank you for those that have joined us here at the Verge Restaurant and Lounge here at the Toll House Hotel in Los Gatos, having a great time, and much more to come. There's still time if you want to come down and finish up. We have just a few segments left in the show. We go till 4 o'clock, and then we have a mixer from 4 to 6. So come down and join us. Our guest today, my co-host, Tom Wilson, the CEO and founder of Wilson Investment Properties. The topic today is investment insights, just really choosing the best structure and strategy for you on investments. Tom, let's quickly talk about, I wish we had more time, but you know how the 1 hour shows go. It's really about 38 minutes. Quickly about trust deeds. I know you offer those a little bit. And then I really want to get into this strategy, philosophy, and thought process of investing in California versus outside, because that comes up a lot.
Well, I started, we do offer trustees. Basically, we have community banks and private investors who fund provide the funding for all of our flips. So if someone's interested in trust deed, 10%, we have glad to provide them for you. You get deed of trust and a note that's secured by the property. California is certainly where I started. My first house was $30,000 and it rented for $300. So if you look at that, that's 1% per month of the value of the house. Well, that same house today is worth $800K, and it maybe is about $2,800 in rent, which people think, oh my gosh, that's high rent. Really, it isn't. San Francisco Bay Area and New York are the lowest rent per invested dollar in the United States. So for that same $800K, you could buy 8 houses in Dallas that rent for $8,000 collectively.
Right.
So which would you rather have, $8,000 or $2,800? So you don't need to be a CPA to go figure that one out. So that's what drives us to other metros. There are lots of good metros in the country, of course, a lot of places you can make money. I chose Dallas-Fort Worth and continue to be there because it's a very business-friendly and pro-growth state. Dallas is the highest employment growth metro in the United States. Texas added one third of all new jobs in the country since the crash have been in Texas. Dallas is a broad-based economy, major transportation hub. The airport's the 4th busiest in the world. It's the highest capacity airport in the world. It's a right-to-work state. There's no personal or corporate income tax. 1,000 people a day moving to DFW. So we and I think it's going to keep going for quite some time. Corporations are relocating there on a regular basis. We've already had Toyota, State Farm, Liberty Mutual, all moving their North American headquarters there. It's just a powerhouse for economy, and you couple that with a high rent ratio, high rent relative to what you pay for it, and you have a formula for success.
Yeah. Can't imagine California is such a tax-friendly state. Why would someone want to move out of California? Well, it doesn't surprise me at all. So are you still holding strong with Texas, number one? And then number two, are there other locations that you're looking at now thinking, this may be an investment opportunity? What are your thoughts about that?
I still have a few doors in California, and frankly, it's a gamble of speculation for future value because it's very tough for anything to cash flow here. And I got to believe in the cities that have run up a lot and that are high priced. My guess is we're nearing the top again.
Right.
But I'm looking at other cities. We always look at other cities. I never lived in Texas, not from there. My reason is strictly that I'm an engineer who did the analysis and calculations and keep track of it very carefully. I have a number of economists that are friends that will whisper in my ear what they don't say publicly necessarily, and I keep track of that, of what's going on in the economy. That's very critical indeed. But we keep looking at other places just because we can't get enough product in Dallas to satisfy the demand of our clients. We're looking at San Antonio, looking at Atlanta, looking at Orlando. So those are the other areas, and I think Research Triangle, has some value too. We just tend to like South better than North. Most people, if they're offered a job in Columbus, Ohio, or San Antonio, I think most people would rather take it in San Antonio.
Got it. Well, what about you always have the resistance. You talked earlier about, when you make an investment, when you're with your financial planner, you make an investment. A lot of them are overseas. Matter of fact, a lot of investments don't even take place in the United States. Most people may not even know where their financial planner or investor are putting that money. The same respect, some people are still nervous about the physical, this property, I want to live near it, I want to be by it, I'm a little insecure. Talk a little bit about why that myth exists, and then the success that you have certainly in other people buying outside of California and not so much near where you live. Why should people worry about that or not worry about it?
Well, they need to worry about it, and the solution is that you get good quality management. So if you're working with a turnkey operator that's already had hundreds of properties experience and has done that heavy lifting for you, that's a way of being able to find the team that's going to be successful for you.
Got it. All right. What about the I know you mentioned other cities carefully. Politically, you didn't say any of them. You're evaluating other cities and locations right now. Not quite ready to jump into those particular cities at this point?
We're probably going into Atlanta.
Okay.
San Antonio, we just can't find enough product. I love Texas, but it's not much better than Dallas as far as availability goes. We work with dozens of wholesalers, and we're just looking for, we're looking for the few properties they can find, and if we weren't 100% closer for anything they bring to us, then we wouldn't even get opportunities that. People who think they can just walk into a city that's a good quality city and walk into some office or find them on the internet and say, find me a product, they're kidding themselves. They'll find it, but they'll overpay for it usually.
All right, we're going to take our last break. When we come back, we're going to finish up with Mr. Tom Wilson. He's the CEO and founder of Wilson Investment Properties. We're talking about investment insights. If you have any questions, if you're in the audience, come on up during the commercial break, or even better, Tom will be here from 4 to 6, right, Tom?
Indeed.
All right.
Or longer.
Questions after that. Joe Cucchiara.
Welcome back to Real Estate Radio Live, streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, just visit RERadiolive.com. That's RERadiolive.com. Again, your host for Real Estate Radio Live, Joe Cucchiara.
Welcome back in. Thank you for joining us this afternoon as we wind down the show here. We are live from the Verge Restaurant and Lounge here at the Toll House Hotel in Los Gatos, doing a live show from 3 to 4. Then we will roll into a mixer from 4 to 6. Come on down and join us. Tom Wilson is our guest today, the co-host. He's the CEO and founder of Wilson Investment Properties. The topic today is investment insights, choosing the best structure and strategy for you. Just with a couple minutes left, Tom, we could do hours and hours of this, and we'll definitely do more in the future. But life balance, work balance, we talked about that briefly. If you could spend a minute or so. I know you just had an extremely personal challenge that you took on and climbed one of the highest mountains, if not in the world. Maybe you could talk a little bit about that. And just spend a minute or so and how this, this lifestyle, this investment, and your choices have really afforded you the ability to do some of the things that you enjoy doing.
Well, it certainly wasn't in the world, but it was in continental U.S., Mount Whitney.
Okay.
And for a guy that's a year away from 70 years old, I was pretty proud to make it up
Congratulations.
there. But, my takeaway for that is that it took a lot of training. I climb regularly over 20-some years. I climb 1,000 feet and hike 3 miles every morning, 6 mornings a year. But I need to do more training for that. And I think, real estate investing is similar. You got to have a certain amount of training and or couple up with others who've got that training that you can rely on. So I take off 10 to 12 weeks a year, and I've got a staff that I've delegated to that with an hour on the laptop every morning I can keep a business going. But so I think real estate, investing in real estate and for long-term passive income as a way to get to retirement earlier. I would like to invite people to come to my website,
tell us about that. Some of the events, too.
And so certainly there's a lot of education information on there. We have a weekly newsletter that you can sign up for. You can always see what the latest product offerings are. We have rental properties that have been rehabbed and leased. We have commercial properties, retail, office buildings that for $50,000 a share you can participate in really high quality products that normally only higher level investors can invest in. We're doing I'll be speaking at the Expo in Dallas in November 21 on a Saturday. On Sunday we have an all-day Dallas field trip bus tour that we invite people to come to. It'll be all day long, traveling the whole Metroplex, looking at where people work, where people shop, going inside many properties, both commercial and residential. It'll be a great, great tour. We have a whole team together to help teach people about that. And we have I Survive, which is a world-class cancer charity event for real estate investors, 450 people at the Nixon Library in the Green Room, black tie event, sponsored by and underwritten by the Norris Group, and I really encourage people, if they're interested in that, it's sold out. If you go to our website or call us up, we have a couple seats that are left.
Okay.
And we have always a lot of events going on,
yeah,
a lot of
education
education
have a lot
events.
of stuff. The best place is to find that at your website, all this information you're talking about, because there's a lot of good stuff to stay.
TomWilsonProperties.com, or call us at 408-867-1867, TomWilsonProperties.com, and we're always glad to offer you, free consultation to look at your goals and look at your portfolio and discuss with you options for where you might go.
Very good. Tom, thank you so much. You've been a gracious guest and always full of a lot of great information, so thank you for sharing with us today. This is Joe Cucchiara with Real Estate Radio Live. We're going to have to sign off for today. Thank you so much for tuning in, and thank you for the audience today. If we give Mr. Tom Wilson a round of applause. Did a great job today. Thank you.
Thanks for having me, Joe. It's always great to be with you.
Joe Cucchiara with Real Estate Radio Live. Thanks again for tuning in. We'll be back with you tomorrow. Have a great afternoon, and take care.
You've been listening to Real Estate Radio Live. For more information on today's program, visit RERadiolive.com. That's RERadiolive.com. Tune in, log in, download our podcast. Discover more at RERadiolive.com. RERadiolive.com.